Hello, techies. Welcome to the Tech Times Africa podcast, where we'll bring you the latest stories on tech and startups in Africa. Catch us every Thursday at 10 a.m. WAT on techtimesafrica.podbean.com. Let us know what you think by giving us feedback in the comments or on our socials. Now, on with the show. Hello, everyone, and welcome back to the Tech Times Africa podcast. I'm joining in from Nigeria as always, and it's a bit chilly this morning in my own end of Nigeria. How is it over there, Karen?
It was a rainy morning. I had a hard time getting out of bed today. It was one of those cozy rainy mornings, but I'm looking forward to this podcast.
Yeah, this podcast is very interesting. So we have something different this week. We have a special guest joining us. He has a lot of experience building in fintech and navigating regulatory complexity, as well as applying AI to modernize credit infrastructure, something that we have talked about in recent times on the podcast. So without further ado, I would like to welcome the CEO and co-founder of Veend, Mr. Olufemi Olanipekun. Thank you for joining us.
Thank you very much. I'm happy to be here.
Happy to have you too. So to get started, can you tell us about your journey into fintech and what inspired you to co-found Veend?
Thank you. So in the past, I used to be a software engineer. So I'm a software engineer turned product builder. I built the first version of Carbon, which was Pay Later back in the day. Built Pay Catcher for Access Bank, which brought QR payment and card rails to millions of the bank customers. And then started with Flutterwave very, very early on as an early employee, helped build the core APIs and then switched to product management, right? So at that point, I learned firsthand how payments could scale in Africa. And that's one part of my career that I'm very, very proud of, solving the payment problem in Africa. 2020, I left Flutterwave. I started a dev shop, right, and was helping banks and fintech automate their processes. But I realized that collection, right, was a problem. In fact, it was ruining their unit economics. Now, there's no reliable payment rails built for the credit use case. So 2020, I founded Veend to fix the collection problem at that point. So the idea was to find a way to debit payment reliably, preferably from the source of income of the borrowers. Since then, we've served so many consumers in Nigeria. We've served more than 314,000 consumers, and in collaboration with banks, disbursing more than $18 million. So that's a brief of my career.
Wow. That's really cool, Mr. Olufemi. I think what I like about your story is you started in the employment space and then you saw opportunities while there and you used that to build out a startup that is actually solving a specific problem, which I think is something we have discussed consistently here, Kelvin, about don't create a startup for the sake of creating a startup, but actually have actual problems that you are solving. And the more they are geared towards local issues, the better they are, because then you have a ready market. And I think that's what you have done, which is really cool and really interesting and something probably for other co-founders and startup owners to think about. One thing I would like to know is fintech in itself is incredibly dynamic, whether it's just in Nigeria or in Africa as a whole. What are some of the unique opportunities and challenges that you have come across when operating in this specific market while building your company?
So I would like to start with this. One, Africa needs money. Nigeria needs money, right? So fintech is still leading because there's still a money problem. More than 56% of sub-Saharan Africa are still financially excluded, so there's still a big opportunity. The population is still young and growing, right? So which means we need to find better ways, right? Optimized way to move money, to store money, right? And make money do things for us. In terms of the challenges, data is still fragmented. We have data in so many isolated places. So today, if you are a lender, you probably leverage financial statement data and the credit bureau, but there are other data points, right? Cooperatives, agent banking data, community association data that could be used for credit, even SMS data on phones and more, right? So what we are still really, really struggling with in fintech is how to get those data into one place so that we can determine who is credit worthy, who is not credit worthy. How can we serve these borrowers, right? Especially when majority of the population are still in the informal sector. How do we bring those people into the world of finance, into the world of fintech, and how do we make this as optimized as possible? How do we use technology to drive growth in that space? Now, there's a high rate of fraud in finance due to this data fragmentation issue, and the regulation is changing really, really fast, which means as a founder, you can't say, oh, I've built my product. You need to keep on evolving. Those are the challenges that we solve for every day. We are used to it. But as a fintech founder, it's something to be aware of. But the opportunity is massive. There's still a lot to do in this space. A lot of people are still excluded in terms of credit, don't have access to credit. Credit penetration is still low. So my vision is, how do we provide a way for everybody to access credits using data from wherever they create value? So the opportunity is large. The challenges are there, but with technology, especially with the way we use AI, those challenges can be solved for. But it's something to be aware of.
Yes. One of the things I picked on from what you were saying is some of the challenges involved. And a lot of it has to do with aggregating data from different sources and bringing them into one centralized space and then trying to make sense of the data. And I think this is something that I saw over the last week that the Nigerian government is trying to do, in a sense where they are trying to link the NIN to borrowers' credit history. It will be interesting to see how this plays out over time. But speaking of regulation, what are some of the challenges with regulation, especially building something like Vind in Nigeria, and how have you addressed them?
Initially, when we started in 2021, we had to do a couple of integrations with banks and other CBN licensed entities. So it was hard getting those integrations done because those banks won't open up their core integrations to us except we own the license. So it was very, very hard. So we were able to scale this by getting a money lender's license and then integrating as a money lender ourselves. So that gives us some level of compliance cover. And then it allowed us to integrate with the credit bureaus, right? The NIBS rails with the banks. And then we started the business. So the initial regulatory hurdle is getting a license. Now, as we scale, we've also faced such limitations where we have to get an actual CBN license. So that's the hurdle. The way we scale that hurdle was just by looking for a license that will allow us to get started. The easiest one to get was a money lender's license. That way, we can get every API we need, right, to lend as a money lender and use that to build our tech.
Awesome. I think coming from a banking background, it's one of the most highly regulated industries in Africa, and getting a license can take so much time, and there are so many hurdles that you have to keep jumping before you can get those licenses to you. So I think as an owner in fintech, if you're a founder who's looking to get into fintech, then that is something you should definitely be expecting as you're coming into the industry. Now, moving away from regulatory hurdles, what are some of the lessons that you have learned that you can share with other founders and other people in the tech space? What have you learned from your journey building an impactful tech company in a market that is emerging?
Okay, I'm going to start with the last one, which is usually the first now for me. My advice to founders is monetize early because compared to founders, in other developed countries. There are some, I won't say disadvantages, but there are some luxury we don't have here when it comes to capital. So monetize early, but find a problem to solve and then make sure it's painful enough that your customers are willing to pay for it. So back to my initial advice, right? Monetize early. Now, iterate really, really fast. And if you can, make it public. When you are iterating, make some announcement for every feature, announce it, no matter how small it is, so that people can see that you are doing things right. You have to be in the public. And then partner when you can. So partner with established companies. I think one mistake founders make is this. Founders tend to partner with other startups that don't have a strong footing yet, where you have a partnership and then a few months down the line or a year, the said partner is no more, right? Find partners who have a strong footing in the segment you are looking at, not early stage startups. So back to the first one, which is the most important, solve a hard problem and then get paid for it, right? Make sure it's painful enough that people are willing to pay for it, and iterate your products in a very, very fast way, right? The market will tell you what to do and continue iterating, and partner in a very, very wise way, right? In such a way that you don't get burnt and not to early stage startups who are still trying to figure it out. Those are the lessons I've learned.
Those are some really solid advice. Thank you for that. Speaking of iteration, I've recently heard about your AI-powered credit decision engine called Vida. And it's quite interesting because we are seeing a lot of applications of AI. And this is one of the first that at least I'm seeing in one of our startups that is in the finance space specifically. So what is the core problem you identified, particularly in Africa and Nigeria, that Vida aims to solve?
Okay, so for the last 4 years that we've been in operation, one thing we've learned is customers want fast access to credit, not accessing credit in an hour time, 48 hours or 72 hours, right? It needs to be instant. So all the loans we've disbursed has been loans where customers get their eligibility instantly, less than 60 seconds. Now, these customers are customers who might not have a credit bureau record. They are usually team files, but we've figured out a way to come up with something we called affordability, and then we then use that affordability for their eligibility. Now, we are leveraging AI to supercharge that process, turning all the other messy data, now payroll data, bank statement data, credit bureau data, bringing it into one place, payment gateway data, right, and turning it into something we call a credit profile, and giving a credit limit in less than 60 seconds and making it available to merchants and lenders, which means a consumer can shop on Jumia and Konga or a corner store and get a yes in less than 60 seconds, which means our products now provides better underwriting. Now, because we are able to connect to all the bank accounts, the commercial bank account linked to the customer's BVN, it lowers defaults, and merchants will be able to serve those customers who they would have turned back to say, oh, no credit today, come back tomorrow, right? That's the saying. And also subsidize those transactions, right? For some merchants who offer zero interest BNPL, which means as a merchant, I can offer BNPL directly without thinking of funding it with my balance sheet. As a lender, I can start a BNPL product and connect to multiple merchants that have signed up on Vida, while the merchant can also leverage our network of banks to serve their customers. Now, the flow looks something like this. A customer approaches a merchant to buy a product, let's say a phone, goes through the checkout process. After the checkout process, banks get the BNPL request with the pre-qualified eligibility and credit limits, and they are able to automatically approve that request. So it can be bank A, bank B, bank C, but because there are now multiple banks, that request has a higher chance of getting approved. Now, we are coming from a past where BNPL is tied to a single bank ecosystem. So you will see bank A on Konga offering BNPL, but only bank A customers can access that BNPL service. You see fintech B, only fintech B customers can access that. But now we've democratized it in such a way that multiple banks can now serve those customers, because now they have a way to measure the credibility and the credit worthiness of those borrowers. So that's how we've used AI to supercharge BNPL and credit profiling in Africa. And this is amazing, and it's going to be huge, because we are looking forward to this being the credit OS for Africa.
Wow. Talk about solving a particular problem in a brilliant way. And this is such an amazing way of seeing how we can use AI for local problems, other than just having it as this very cool word that we use around. I'm really impressed by that. And there's something you've said that has really caught my attention in terms of reducing your non-performing assets, because we have seen, and Kevin can attest to this year alone, we have seen 2 BNPL companies that are under receivership. And the biggest issue that they have had is non-performing assets. So the capacity to use AI to reduce your non-performing assets is such a big problem solver within the fintech industry. So that's a really cool way. And it leads me to the next question, which is, as AI is becoming this big thing in every industry, how is it improving BNPL services in African markets? And ultimately, how do you think that AI will impact consumer lifestyle?
Okay, so we have a saying at Veend: credit is a basic necessity that everybody needs access to. It's as important as the air we breathe. A lot of people might not see it that way, especially if you earn an income and you feel you don't need credit. But the point where I realize how important it is at some point where I was outside Nigeria. I tried to pay for an hotel using my Nigerian card. I was asked to provide a credit card. That's in an economy where it's credit led. I couldn't provide a credit card because credit cards are not popular in Nigeria. I had to pay with a debit card. It didn't work because of FX issues. I then had to pay with cash. Now, I experienced firsthand the effect of lack of credit, right? That subtle inconvenience was big enough for me to see how important, and it revalidated the reason why I started Veend, right? So credit, it's important. Any salary earner, trader, immigrant needs to be able to prove their credit worthiness at any point in time, right? Needs to be able to get access to that extra liquidity simply because they add value somewhere in order for them to live a better and comfortable life, in order for them to grow their business. And this will unlock finance everywhere. Talk about commerce, education, health, mobility, right? When credit flows efficiently, every other industry grows. So our long-term vision is to ensure that every single person in Africa, whether formal, whether in the informal ecosystem, has access to credit, right? And we've been taking an ecosystem approach to ensure that everybody is included, because the credit that a farmer needs is different from the credit that a salary earner needs. It's different from the credit that an SME needs, right? So we have been taking an ecosystem approach, and we know this will have a very, very huge impact in the African ecosystem.
That's an ambitious goal. And as you said, credit is something that's needed, especially in a country like Nigeria that we don't really have a lot of credit infrastructures like you mentioned. When you want to buy anything, you have to like work and get all of the money to get that thing. You can't just wake up and decide you want to get something. You have to plan, you have to save. And this would definitely be a solution for a lot of consumers within Nigeria, and I suppose the rest of Africa can benefit from this. To go back to the conversation on AI, whenever AI is talked about, you hear about bias and you hear about fairness in these conversations, because this AI is trained on some data and it can have that bias depending on the data it's trained on. So how does Veend ensure that Vida's algorithms are fair, transparent, and minimize bias in the credit decision making?
So first, We blend traditional credit bureau data with cash flow data from bank statements, payroll data, so that there's no missing piece. That way, we are using existing data. Now, we also run, should I call it bias testing or back testing, using our existing data sets, right? So remember, we've been in the credit space for more than 4 years. We have data, right? So we use that data as a baseline, right, for testing. And also we have a functionality where the decisions can be override by human credit officers. So on Vida today, a credit risk officer can accept or decline the result of the AI credit profiling, which means there's no black box. So an human is still involved in some cases, right? Now, when the bank is now confident with the result of the AI, they can then turn on the auto approval feature. So that's how we've managed fairness and mitigate bias in the implementation, right? So, however, it's still something that is learning, that we ourselves keep on learning, and we keep on adding more functionality. So on the credit profile today, you see the AI insights, right? On the consumer side, the consumer will see different recommendations on how they can be much more credit worthy, right? If they don't have a consistent income, how they can maybe provide a co-signer or provide a collateral, so that by the time they start applying to financial institutions, it's going to be a yes. All right. On the bank side, we also have some recommendations on how to serve those consumers, right? Showing them all the perceived risks and how to mitigate those risks. And then the bank then has the ability to either approve or deny. So it's fair, it's transparent, and then we've tried our best to mitigate bias, right, as much as we can, while we continue to learn and iterate.
Fantastic. Always innovating. And I think that's the life of a founder. I'd like to understand, you have been known to speak about democratizing the credit right in Nigeria and in Africa. What does that phrase mean to you? And how is Veend through Vida contributing to achieve that goal?
What it means to me is this: I look forward to a future where, without thinking at all, you go to a filling station, get to the pump, fill up your car without thinking about the money in your bank account. As a taxi driver, you wake up in the morning, get on the road, fill up your car, and by 6 o'clock, right, you'll be able to pay for that fuel that you just purchased, right? As a salary earner or as somebody in the informal sector, you know that you don't have to pay your house rent upfront. You can pay monthly, and your landlord, without having a second thought, will say yes, right? It will become a norm because they know, oh, Tunji, Emeka, or Musa, who lives here, has a credit profile. And if the credit profile is not good enough, ask some co-signer or ask some guarantors listed on that credit profile. So Emeka, Musa, or Tunji will always pay his rent, right? So that's it. That's what I look forward to. And that's what life should be like, right? Especially in a credit-based economy.
That makes a lot of sense. You kind of started to touch on my next question as we draw to the end. What is your long-term vision for Vind and the impacts you hope to have on financial inclusion across Africa?
Okay, my long-term vision for Vind is Vind will be the credit OS for Africa. So any salary earner, trader, or immigrant can prove credit worthiness once and unlock finance everywhere, right? So it's something you have to do once. Get your credit profile once, and everybody starts seeing you as a credit worthy person, and you can prove your credibility, right? So whether in commerce, health, everywhere you go, you are seen as credit worthy and you can prove it, right? That way, funds can flow efficiently across every industry, right? And the GDP of African nations can grow because when there's more money flowing, right, from one person to another, it results in GDP growth, right? So that's my long-term vision, being the credit OS for Africa.
Wonderful. That is amazing. And I look forward to seeing Vind in Kenya, hopefully seeing it as a successful company in the buy now, pay later space. One of the reasons why Kelvin and I are so passionate about this podcast and the work that we do here and on Startup Graveyard is because we're both founders. And as a founder, you're always learning. So what would be your parting shot? What would you say to other tech startup founders in Africa who are looking forward to build something that is impactful and that changes this continent? What would be your parting shot to them?
I'll say continue grinding. I know it's hard, right? Just keep the grind on. And like I said, monetize early. And if you're a bank, fintech, if you're a merchant and you want to launch a buy now, pay later product with zero technical lift, right? Sign up on Vida today at askvida.ai or reach out to me on LinkedIn. We are going to get you started.
All right. Thank you for that. And also thank you for joining us on the podcast today. We really enjoyed your conversation. I'm sure Karen and I have picked up on a thing or two. So thank you for joining us today, Mr. Olufemi.
Thank you for having me.
Thank you for listening to another episode of the Tech Tides Africa podcast. Remember, leave a comment or share with your friends. We'll see you next Thursday at the same time and place you get your podcast. Until then, stay well.